base, line, go. So as promised, here is the baseline video. This is a continuation off of last week's video, and if anybody out there is finding this channel for the first time, turn back. Don't leave the channel, but just don't start your journey here. I do make videos from time to time for people who are brand new to my channel, but this one is for the homies. This is for people who have been with me since the start, who have consumed all the material, and this is just the next step in the progression. And if you were brand new and you were to start here, you would be totally lost. So instead, do this please. Go to the beginner's video if it's your very, very first time to this channel, even if you're not a beginner in Forex trading. We do things a very different way. I know it's a little bit of a buy-in for you to spend time and watch a video just to see how we do it, but I think you're really going to like what you see. There is no Forex channel like this on the internet. So check that out. And if you're familiar with some of the material, you got to make sure you see the moving average crossovers video I did last week. Now, because all of these things, like I said before, go in a progression. And this video is just going to totally lose you halfway through if you haven't seen both of those videos above. So you owe it to yourself, really. But do that first. We are not going anywhere. We will be right here waiting for you when you come back. I've linked both of those videos down in the description if you'd like to go there now. For the rest of us in this video, here's what we're going to do. We're going to talk about where the best place is to put your baseline in relation to the chart, in relation to the rest of your indicators, all that. And then we're going to talk about the rules for entering and exiting. We've already kind of done that, but it goes a little deeper in this video. And then we're going to talk about how you can reduce your losses even further by using a baseline. That's the whole purpose of having it, right? Well, you're actually going to see some bonus effects for having one. You're actually going to add on more wins down the line as well. Pretty cool. But I mean it, traders. If you saw the title of last week's video and said to yourself, well, I don't want to watch that. That's a Dirty Dozen video. I already know he doesn't like moving average crossovers. That's a waste of my time. Well, you missed out on something pretty big. I revealed the final piece of the algorithm, the algorithmic structure, I should say, that we use for our trading. It's right there, number 2, baseline. And that's what this video is about. And you missed the reveal. So that's what you get for skipping over videos. But today we are going to go deep, a lot deeper than we did before. You're going to kind of understand why this was the last piece I revealed. It would have been pretty confusing had I not done this in the order I did it. And there are already people in the comments section of YouTube that get completely confused in my videos, which I can't really do anything about. I pride myself on my ability to explain things as clearly as possible. And if afterwards people still don't get it, I mean, that totally sucks. I don't want it to be that way, but if it's got to be that way, then it does. For the people who are still confused after this, there are 2 more videos that are going to talk about the baseline, so chances are your question might be answered in one of those videos. Or we also have a Discord forum here. If anybody would like to give me an updated, never expires link down in the comments section, I will pin it to the top. And because we haven't done that in a while, so you can go there if you have any questions, and there's a whole community of people that would be willing to help you. But let's go ahead and move on. Oh, I forgot. By the way, haters, a lot of haters out there thought that I wasn't going to reveal the whole thing without charging you for parts of it. Where you at? Come forward. It's okay. We will grant you amnesty. But we will gladly add this to the growing list of the things that my haters were wrong about. They have this crazy ability to be really bad at predicting things, which is probably why they're bad traders in the first place. But for the rest of us, we got to go over some rules. When you use a baseline, there are some ironclad rules you need to follow. And I'm glad most of you have experience in testing and trading with this algorithm now, because this will be a lot easier as opposed to if you didn't. So let's move on to what they are. So as far as entering and exiting a trade, we went over this last week, but I'm going to reiterate it again. When price crosses over your baseline and then closes beyond it, it can move over, but you got to wait for that thing to close. Remember the indicators basics video. Always wait for the candle to close and then see what you have. As soon as it does that, you officially have a trade entry. Now, that doesn't mean you enter a trade. That just means you have the entry signal. You still have to check on the rest of your algorithm to see if it also allows you to go that way. This is no different than anything else. The whole purpose of having a trading algorithm is to get the best entries possible, and you must consult with your entire thing to know if you actually have one of those. But one of the other things an algorithm does is give you the best exits possible, and that is another place where this baseline comes in. Check it out. You are going to find out sooner than later that once you have a really good baseline, once it does cross over and close, it is probably going to keep going that way far more often than it is not. But during those times when it doesn't and it reverses, even if it's the very next candle, if it closes the opposite way, you immediately exit that trade. Now, the good thing about this is once you do that, it's often going to get you out before a trailing stop will and before your exit indicator will even have a chance to move. And you can really, over time, mitigate a lot of losses and minimize a lot of losses this way. I have some really good examples on my charts we're going to go look at in a few minutes. But there's a reason why this is in green. It is also a great money management tool when used the right way. But while we're here on the slides, I would like to reiterate another rule I briefly talked about last week. And that is, you're probably so used to taking kind of a top-down approach to where when you look at your charts, you look at your confirmation indicator and see what it says. And then only after it gives you a signal, you look at the rest. From this point forward, what you're going to have to do is look at both your baseline and your main confirmation indicator to see if either one of them is giving you a signal. It used to be just look at one. Now you have to look at both. Look at your confirmation indicator and your baseline. Honestly, this, after you start doing it after a while, it's going to add on another, 1 second to your chart time, times however many, pairs you go with. But still, it's pretty quick. This is not a big chore. But this is cool. You're not doubling your opportunity to enter a trade on a pair, but you are increasing that chance. So if you're bummed out you're not getting the amount of trades that you would like, this indicator, this baseline here can really help. So I know a lot of you have been looking for baselines already. Let's talk about where it should actually go on your chart. So I feel like it's kind of obvious, but I think we have to mention it, and I just want to mention it so it can make a lot of people's searches easier. You need to kind of match it up with the rest of your algorithm. It can't be too far away from where the rest of your algorithm is giving you a signal, all right? Because everything needs to agree. If your baseline is way far away from everything else, it's never going to agree. You're never going to enter a trade. Or worst case scenario, your baseline is going to make you enter a trade too late. But it can't agree all the time. So it's got to be close, but not too close, because ultimately what you want this thing to do is filter out losses that your algorithm is already giving you. Remember that. And you're going to have plenty of time to discover these locations, and then once you find a pretty close area, you're going to be able to fine-tune it a lot further simply by changing the settings. And fear not, we are about to go to the charts, and you are going to see examples of how this kind of plays out, and I think that's going to clear up a lot of confusion and make this whole thing easier. But before we do that, there's one more thing we need to talk about. And if you remember, for those of you who listen to the podcast, good on you. I did a podcast a while back talking about the one candle rule. It was episode 39 of the podcast. I'm going to link that one down in the description as well if you want more information on that. But this one candle rule, just know, does not apply to your baseline. All right? It applies to everything else, not your baseline though. A lot of you guys are right on top of this stuff. I know this question's coming, so I wanted to talk about it now. But if you have a situation where a candle crosses your baseline and closes beyond it, and the rest of your indicators have not caught up yet, you can give it ample time to catch up if they need to. So if you are trading the pound dollar and you get a signal to go long on your baseline, but nothing else in your algorithm is telling you to do that yet, make a note somewhere, either on your whiteboard, on a piece of paper, somewhere, and monitor that for the next few days to see if your indicators do catch up. And there's one exception to this rule, but we will tackle that next week. I'm already throwing a lot at you now, but just remember this piece right here. This whole idea is going to tie into the concept we are going to talk about next week. And I will say this too. Still go out and search for really good baselines, but don't back test them just yet, because I think you need to see next week's video first. But that's fine. That still leaves you with a lot of stuff to do. You just don't have to go and put the actual back testing in just yet. I don't advise you do that. All right, but let's go to the charts and see some examples and paint this picture a little clearer. So here we are at the dollar-yen daily chart. And just like always, to keep it easy, I'm not introducing anything new. We are pretty much seeing the same old cast of characters that we have seen in the past. For my confirmation indicator in this example, we are using the Arun up and down. A quick review. So when the blue line crosses above the red, that's a long. And when the red line crosses above the blue, that indicates a short. It's all about which of the lines is higher than the other. And then all I did here is just put on 20 SMA. And when I did that, they actually turned out to be fairly close, but not really. So this is a good example, I think. So when I go backwards and test these out, I am going to look for signals that I get here and here. So really it just comes down to which one did I get first, and then we'll cross-reference it with the other one. So all the way in the corner, we got a short here. And if you go down, where my crosshair is down to the Arun, we can see that the blue line was still above the red. So that did not give me a short signal. I would not have gone short there. But 2 candles later, look, it actually did. So I would have just entered right there. That would have been a loss, and I would have likely exited right here at this candle, if not sooner, depending on what my exit indicator did. So not very good. But the nice thing is I also have an entry right there. But that trade would have never happened because my confirmation indicator never gave me the signal to go long. That red stayed above the blue the entire time. And then on the next signal I got, which was here, I look down, the red is above the blue, I take that trade, and there it is. Keeping my losses fairly low, making this other loss non-existent, and then making sure I'm in when the shit gets good. All right, so moving forward, let's see what else we have. More good stuff, I hope. So the next trade I get is actually down on the confirmation indicator. Oh, no, it's not. I'm wrong. It was actually right there with that long. Now looking down, I didn't quite get the signal yet. I got the signal on the very next candle, and that just turned out to be a loss. Not very much above. Came back down below, and I exited. Now this also became a signal. And it's a short signal. I look down. The red is not above the blue. So my confirmation indicator says, do not trade. And that was good, because the very next candle went the other way. So that loss never happened, thanks to having an algorithm and making sure that everything agrees with each other. Do you guys see what I mean? That was a short signal, but the Arun up and down did not agree at any point in time, and the trade immediately shot the other way. Now when it did, what did it do? It gave me a long signal. That was the very next signal on this chart. So if we look down, it's obvious that Arun is agreeing, and as soon as it does, that becomes ours. Pretty cool, right? Again, we took a loss. That's fine, we take losses. But this loss never happened. And then on the very next day, we have an entry, and that entry is awesome. Had this baseline never existed, all right, so pretend it's not there, you would have probably taken that trade, and, I mean, how much drawdown were you really going to have? You might have not been in this trade at all. You might have been out. Your exit indicator, your stop loss, whatever the case is, might have already tripped you out. And so if you were, you never got to take part in this. But because of the baseline, you took the loss, but you got to re-enter at a really good time. At no point in time did the Arun tell you to come back in. There were no crosses this entire time. So the next time anything did cross is not there because it actually gapped and then crossed upwards. So it never crossed below the line. Is, let's see, right there maybe? I'm looking at my screen at an angle so I can talk on the mic, so I can't really see for sure. Let's take a look. So Arun says get in here. Now this is a great example of what I'm talking about. Arun up and down, you can see the red line crosses above the blue right on top of this candle. Let's actually zoom in and take a look at this. Right here, to where your baseline didn't say get in until right here. That's a pretty big difference. I mean, you probably want those 66 pips, right? So this is a really great opportunity to tweak your baseline to better accommodate your confirmation indicator. You don't want your baseline making your confirmation indicator worse. You want to end up making it better over time. And so you need to do something about times like this, especially if they keep creeping up. But let's see if these situations creep up again. I have a feeling that it might. So the very next trade you got was this right here. So came up right here, you look down, Arun is saying no chance, wait till we catch up. Once it did, let's see, yeah, this candle right here, you would have pretty much entered along at the very top. And then you could have survived that drawdown and still done okay. But I have a feeling your exit indicator would have had something to say at some point in time, either here or up here for a minimal gain. So you would have rather gotten into this trade a lot earlier. So that is another area for improvement that we can see. Your baseline has already done some good things, but in terms of playing well with the rest of your system, that's where the game is really won. And you have to make sure these things agree. Another cool thing to see on this example is right here on the very next trade. That was a short. Arun is still saying long, but it finally did tell you to go short right about here. And that's fine. You lost a little bit, but that's 18 pips. You would have entered right here, and this trade is still yet to be seen. So you'd have been up about 33, down 15. No big deal. But that is a situation where if we were to follow the one candle rule, we would have just never entered this trade to begin with. But when it comes to the baseline, we don't. We allow the rest of our system ample time to catch up. The question we have to ask ourselves is this entire system getting us into a trade at the best possible time? And combine that with how well it actually eliminates further losses. It's quite a bit. Aren't you glad we did this last? This is a lot to think about. But just like everything else on this channel, once you understand it and once you start putting it into practice, it becomes very easy. And it becomes very exciting because a good baseline is just an awesome thing on its own. Let's look at the euro-dollar. Euro-dollar daily chart, and we have the same old 20-period SMA on here. And you're going to notice a little something here. When this thing goes with the trend, which is ultimately what a baseline really has you attempt to do, it typically keeps going. And you can tell by the direction that the SMA is turning. Now, in your algorithm, you're going to ignore this, but this is just for example purposes. Watch. The moving average is going down. Price thought it would go against the current and really gave you nothing. But as soon as it went with the current right here, gave you something really awesome. We're going to talk about this in a minute. But again, SMA going downward, crosses downward. Really nice trade. Tried to go against it. Moving average is tilting downward just a little bit. Price tried to go against that. Nothing. And then this is another opportunity we can talk about right here. So beyond that, let's pull up another confirmation indicator just to add another layer to this. And I'll show you how that works too. Let's find something that we've talked about before. Where's Chaikin? Chaikin money flow. This was in the algorithm piece video. 20 is fine. Colors, let's make it just a bit lighter so people can see it. And make sure we have a zero line there. And make sure it is an actual color. Okay. Perfect. So let's see how this works. So remember how I told you to pretty much ignore where this line is tilting overall, because your indicator, your main confirmation indicator, and all the other pieces are pretty much going to do that part for you. So you can see when it crossed and closed above and gave you a long signal, it was a bad signal. There really wasn't much there, and there's a lot of downside. But you would have never been in it, because if you look down, this line was below 0. And when you have a 0 cross indicator and the line is below 0, you don't get to go long. That's why these indicators exist. So you would have never been a part of that loser, but as soon as the winner came around, right here, you look down, Chaikin money flow says go right ahead. And you did. Now up here, you took a loss right here. Because if you look down, Chaikin money flow said the line is above 0. We're in a long program. You go right ahead. And then the very next candle was this right here, and it crossed the other way. But that's fine. I am so much okay with this because it gave us a small loss, 25 pips maybe. But it didn't give you a signal to go this way. Price could have easily gone further down this way. That's why getting out early like that is so important, because you want to protect yourself against further losses. But it was just a retracement. The very next day you got another signal to go long, and your confirmation indicator agreed, and there you have it. That would have definitely been a win in some capacity. And then moving forward, did you get a signal here on both? You got it here and down below. Yeah, looks like it's right at that little joint, which goes under the 0 line. Everything is saying short, and you would have gotten that too. Really, really nice. But I like this example here because this shows what I was talking about earlier. Get out while you can. You know, this candle is saying, okay, we're no longer in a long program. As of right now, we're in a short program, and you need to exit. So you take a small loss to get the bigger win later. Really cool. And then over here, this was a really bad trade. It was a bad long signal, I should say. It was never a trade because we never took it. Because looking down below, your confirmation indicator said short, while this said long. This was never a trade. You guys see how this synergy works? And we're only putting up 2 pieces. But just by doing that, we are getting the best of it almost every time. Now, what happened here is the same thing pretty much as what happened over here. You have a short. You can see that your indicator agreed. You took it. You made absolutely 0 pips. You took a loss, but a pretty small loss because you would have exited right here at a 32 pip loss. And then the very next candle gave you that re-entry that your indicator agreed with below. Then you end up getting all that. A baseline is a really great thing to have from an entry standpoint and a money management standpoint. And once you start combining it with even one piece, I mean, the magic starts to happen. And then when you start combining it with even more pieces, oh my God, you guys are going to see this for yourselves. These are not super high quality tools I'm using, but just simply finding half decent ones and combining them can do some really awesome things that almost no other trader is doing. And then from there, things just keep getting better and better and better. So in conclusion, get very familiar with the rules of baselines and how to look for them and how to test them out, because this is going to be part of what you do now. So the sooner you get it locked down, the better. And just know that a great baseline, when it's all said and done, should add wins, eliminate losses altogether, and then help mitigate the losses you do take. So it's worth taking this week to go and start finding a lot of these different indicators and a lot of these different moving averages, because there's so many different types out there like we talked about last week. But just don't go full on back test yet, because we have 2 more videos to go before you really start putting in serious time trying to find one of these. But I think by now you know just how good a great baseline can be for you and how it can take everything you already have from good to spectacular. And so I think almost everybody watching this video already does, but if you don't, what are you waiting for? Subscribe, hit the bell, don't miss anything. These next 2 videos are the final pieces of the final piece of the puzzle. You need to see them. And then I got some really great videos lined up for you after that. So you don't want to miss out. But in the meantime, start looking at a lot of different moving averages and get a few that are going to end up making the next round of your testing. If you do this work now, it's going to be a lot less work you have to do later on. The work never stops, traders, but it is exciting work. Don't you think? Embrace it. Go get it.